Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 1st, 2016. Wow, we're already a month into the new year. Back early last summer, before the big decline started in August and September, I'd even complained a little bit. It's like, wow, the market's boring. There's nothing going on. It's just channeling. Well, you haven't heard me say that in several months. It's anything but boring. It's been dramatic and really, really interesting. That's for sure. Last week was no exception. Again, pretty dramatic week. Here's a great kind of summary of January and the week we just ended. This is a headline from Reuters from today when I'm recording this from January 30th. It said for the month the Dow lost 5.5%, the S&P fell 5.1, the Nasdaq dropped 7.9, capping the worst January in 7 years. And then for the last week we just ended, the Dow gained 2.3, the S&P 1.7, Nasdaq 0.5. That's pretty dramatic stuff. Yeah, the Dow on Friday rallied 396 points. That's a rally. That's certainly a one-day rally. That is dramatic. What's causing all this? I'm just going to look at a couple headline snippets here. So the first January consumer sentiment falls. They're saying that's fueled by the wealth erosion in the stock market. All right, what do we got? Q4 GDP fizzles. U.S. economic growth declines sharply to 0.7. Durable good orders plummeting in December to 5.1. Just plummeting 5.1. The Fed minutes, they got some concerns about the economic outlook. Fed's got concerns about low inflation. And out of the blue, the Bank Japan announced that they're going to cut their rates to negative, and Wall Street surges at the end of an awful January. There's all kinds of economic data you can go look at. And I think if you try to coalesce or distill all of that down into a clear picture of what's going on in the market and particularly what's going to happen, I think you find yourself at this famous tea party in a world of where nothing makes sense. And I don't care if you got a PhD in economics and you try and collect all the data and figure out what is going on and what's going to go on. I think your head's just going to spin a little bit. So rather than go crazy trying to figure all that out or look at tea leaves or whatever other method there might be, I just turn to the charts. And because all of that information, all of that economic information, whether it aligns with itself or whether it's in conflict, price pattern is what the collective universe of traders and investors all over the planet, what they think of that news and how they're responding to that information and news. There's only one reality in the market, and that's price. Right? After all is said and done, what are things selling for? Right? And what's the pattern that is formed from that selling? So we're looking at the S&P 500 chart, and it hasn't. Now it's clear. I can look beyond the headlines, and now I got some clarity on what's going on here. At least it's clear to me, and I'll show you what I see. I see a bear pattern, just like I have. So remember, off this chart, coming way back from here, we had a 6-year bull run that was awesome. And then I've talked about both back in the summer, a bearish pattern which is unbroken, and then a new bearish pattern forming in the latest, lower lows, lower highs, lower lows, lower highs, up to here, and an amazing lower low. So yeah, it's pulling back up, and I've said for the last few weeks that we should expect to pull up. That's absolutely normal. It would have to go up above this high here, which would be pretty close to 2100 on the S&P 500 to break this pattern. So it could continue up quite a ways, and this down pattern could still be in effect, and that's what I think is going on. I'm not sure how high it will retrace, but I'm convinced there's just a high probability that we are continuing down over the course of this year. Now I am going to look at a 60-minute chart, and we're going to look at a shorter term time frame and maybe project what's going on into the next week. That might be helpful. So when I'm trying to make shorter term projections, like within a week, I like to look at the S&P futures contract on a 60-minute time frame. So every price bar in this chart represents 60 minutes or 1 hour. And this is again it's called the E-mini. This is the S&P 500 futures contract. Well, I see a really clear, there was a Elliott wave, what's called a wave 1, 2, 3, and this was the big downturn that made January the worst in 7 years. Now there's been a very much expected what's called a retracement up into a retracement zone, and these are Fibonacci levels between 38.2 and 61.8. So it's retraced into an expected zone. Now that may not be over yet. It could go up as high as 1971, even a little bit beyond that. And this would still just be a very normal and expected retracement to this big, huge down move. But of course, the question is, what comes next? So if this is a normal, healthy, expected retracement, what happens? Let's assume that it ends. It just ends where it's at, and Monday the market opens and heads back down. Now again, it could go up to here or higher, but let's just assume it turns around here. Where are we going next? And where we go next is down into what's called an extension area, a Fibonacci extension area for the next move down. It would be expected to go down between 1767 and 1664. Now remember, this is premature because this has not turned around yet. It'll start putting in lower lows, lower highs when it's over, but we're just making an assumption if it ended here, where would it go? And if it were to end there, it would go down to 1767 to 1664 on a shorter term time frame. So I hope that provides a little bit of clarity. Again, I still think we're in a bear market. This current pull-up is expected and normal part of a downtrend. Let's take a look at gold as always. Last week I said if gold got up above this line, above 1313 on the gold futures contract, that I thought that had real meaning and that the rebound in gold had started. I stand by that statement. I think it has happened. I think that was a key next move, and certainly gold could do this. It could pull back again. If it goes below this level, that means that maybe this has failed. So it could pull clear back to here as long as it doesn't go below that level and then resume. I think gold is a buy. It's a long-term buy, probably throughout the rest of the year, maybe longer. And it can be traded with GLD as an ETF. There are gold mining stocks. I'm going to be publishing some picks on gold mining stocks to my subscribers. I think there's some that look really, really good. You don't need to go buy bullion or coins or all that stuff that you hear about on satellite radio or late night cable TV. You can just trade the ETF like a stock, or you can trade gold mining stocks. And there's mutual funds that focus on precious metals as well. But I think the rebound in gold has started. It's underway. I'm on record with that as of last week, calling out this level, and now it's broken it. So I think it's happening. And here is oil. This is the oil futures contract. Great way to look at it. Oil has rallied off the bottom just a little bit. I made fun of that just a little bit last week when they were, calling this a rally. It's continued to move up. Now, what do we want to see to say that the oil, retracement has begun? Remember, I'll show these levels real quick, right? If oil's come down since the summer of 14, a normal expected retracement would be up into these Fibonacci retracement zones from 38.2 to 61.8 retracement. So that would put us up at a per barrel price of 58.92 to 78.73. Somewhere in this range is where it would go once this retracement gets underway. It hasn't proven that it is underway yet. So we had a new low here. We've come off this low, and what we need to see is at some point pull back again and put in a newer high. This is a 3-point move, right? A new high, a higher low, and a new high. Once this has happened, just like I showed you on the gold where it said this did happen, it has not happened on oil yet. And when it does, I'll publish that update, and then there may be some great trades in oil and energy related stocks which have been beaten down unmercifully, and they may be retracing as well, and there may be some great profit. Not there yet. It hasn't proven it yet. Well, that's the update for this week. As always, it's super interesting to watch the market. I enjoy giving these updates. I enjoy answering your questions. Don't go to the tea party. Don't drink the Kool-aid, right? Focus on the reality and always use risk control. Thanks. We'll catch you next week.